see if this is going. Tried this once and then my internet went out. Like, what? We have like quantum fiber optic, whatever the heck it is. It's supposed to like never go out and be super fast. So that was great. Okay, so I think we're going. I'm just going to peek and make sure this is actually on Facebook, and just assume that it's also on LinkedIn and LinkedIn and YouTube. So let's just peek. Okay, just now. Okay, great. Okay, it's working. All right, happy Thursday. Only 13 minutes late, but most of you guys watch on replay anyway, so welcome. So let's jump right in since we're late already. So today we're talking about meals as a business deduction. And what we want to talk about is how do we make sure that we are maximizing that deduction? How are we making sure that we're taking it legitimately, right? How do we make sure that should the auditors, the IRS ever come knocking, we're going to get to keep that deduction? All right. For those of you that do not know me, hi, I'm Bree Veers. I own Bree Veers and Associates in Denver, Colorado. We are a tax accounting and tax strategy firm. We work with clients across the country. And we really try to help clients. We do tax prep, but we also are trying to really lean into the tax planning where we help you save dollars, save money on your taxes in order to utilize that tax savings to reinvest back into your business, back into yourselves, back into your future, and build wealth. So that's our agenda. I've been in accounting for over 20 years. I've been a CPA for I don't know how many, but I'm a CPA, I'm a certified tax strategist, I'm an advanced tax planner. And what all of that means is I passed some tests and I've taken some courses. Where I really hang my hat is on my 20 years of experience, my 11 years, 12 seasons as a tax preparer. And ever since becoming an entrepreneur and taking the business and having the business as my own, I've really been focused on the tax planning piece and figuring out how our tax code works, how I can take everything that I've learned over the last, I guess it'd be 6 or 7 years, and how do I get that information out of my head and into your guys' toolboxes so that you guys can utilize the tax code to save money in your tax plan, tax picture. All right. So we are in the middle of a series that we're doing on tax planning. Let me see if I can pull that up. So I want to say all through September and October, we are focused on how do we take these easy tax strategies and help you guys with that? How do we're calling it tax planning 101. What are some simple strategies we can implement that we can make sure we're maximizing in order to ensure that we're maximizing our tax savings? All right. And so I think this is week 4. Let me look. Usually I have my training schedule up, but because the internet went down and I had to reboot, nothing's open. So yeah, we did an intro on turning what it means to turn post-tax dollars into pre-tax dollars. We talked about home office. I was sick last week, so we'll make up the mileage and auto at some point. And today we're talking about meals and dining. And so what we always talk about, guys, I try to break it into 3 sections when we're learning about tax strategies. And the thing about meals is it's not really a tax strategy. We talk about tax strategies that need to be implemented, right? We talk about, you hear accountable plans, filing as an S Corp, hiring your kids. Those are things that require some implementation on the back end, whether it's by you, your attorney, your CPA. Somebody has to put some, documents in order, has to put some pieces in place in order for you to benefit from that. All right. When it comes to deducting meals as a business expense, there's no implementation. All right. It's really just about what we talk about as qualification, documentation, and reporting. And that's what we're going to talk about today. So we're going to talk about those 3 things. And then at the end, we're going to talk about not how to get creative, but how to make sure you're maximizing this deduction so that you're taking full advantage, right? So that you are taking all of those dollars that you're spending on those meals that are legitimate business expenses and making sure you're getting the tax advantage out of it. All right. I didn't open. I'm doing this without my outline because, again, everything closed and I was panicking to get everything back open. I can do most of it without it, but we'll see. We'll see how far I can get without my cute little outline, my cheat sheet, if you will. So the first thing we're going to talk about is qualifying. Okay, in order to take any sort of business deduction, you have to qualify for it. Well, to take business meals as an expense, first and foremost, you have to have a business. All right. Keep in mind, it does not have to be, your business doesn't have to be your only source of revenue. Okay. When we say business, you can have a W-2 business, a W-2 income, but then you can have a side hustle, or you can have maybe something in a business you started to supplement your income. Maybe you're slowly trying to build that business and you're just starting out. Maybe you took a hobby that you were doing and turned it into a business. The definition of a business, guys, is anything where the purpose is to make money. Doesn't mean you have to be making money, all right? But your intent is there to make money, right? Whether it's $1 or $1 million, all right? If you have an activity going on with the purpose of making money from it, that is a business, all right? So we check that qualification off. We have a business in place, all right? So the other thing, you guys, is this is where people tend to get caught up when they do have a business and they're trying to figure out, does this meal, does this food count as a business expense? Is that the IRS says that it needs to be ordinary and necessary. And there's not a specific definition of what that means, okay? And that's gonna mean something different to every single business. Businesses of different sizes, businesses of different industries, all right? That ordinary and necessary means something different. All right, so what I am trying to teach my clients to think about is think about reasonable and with business purpose. All right, so that's what we're going to talk about. We're going to spin that ordinary and necessary into reasonable and with business purpose. All right, so let's start with reasonable. Okay, let's start with reasonable because the word reasonable is going to mean different things to different businesses. Okay. So I'll give you a couple case examples of audits that have gone through. Okay, so there was a client, not one of my clients, this is a case study, where they had meals of $50,000, right? They had $50,000 in meals expense on their tax return. And you and I sit there, and when we hear that number, we go, that sounds like a lot, right? Holy moly. But that $50,000 was in a 7-figure company. They made over $2 million in revenue, made over $1 million in profit. So that $50,000 was less than 5% of their taxable income. And in that instance, the IRS auditor or the examination didn't even look into that line item, all right? Because when that auditor specifically looked at it and said, that looks in line, that looks reasonable, right? So they didn't even dig into that number. Another case study, a client had meals, an expense of $5,000. All right, $5,000, much less than that $50,000 we just talked about, right? But this business, all right, had total revenues of 50 grand and actually showed a loss once they took all their expenses. All right, so in that case, in that instance, the auditor did want to look into that meals line and dug in and wanted to make sure that that $5,000 was ordinary and necessary. All right, so if we think about reasonable, keeping the number reasonable to what our activity and what our business is, we're going to be a lot less likely to draw that audit in the first place, all right, or draw red flags that we talk about, okay? So reasonable. I want to try to give you guys some examples, all right? So if you are just starting out, all right, or not just starting out, let's talk about reasonable. Let me go back to reasonable. Let me start with business intent, okay? And then it'll all circle together. I'll combine the reasonable and the business purpose, all right? So we have to have a business, but then the meals that we're deducting as a business expense have to have business purpose. They have to have intention with business, okay? And where people tend to leave money on the table with this is that something that didn't start out as a business meal or a business dinner out can turn into one unexpectedly. Just because it wasn't planned to be a business meal doesn't mean it's no longer one. Can't be one. All right. So let's say, for example, you're going out to dinner with your neighbors. Okay. And you guys are just going out to dinner. It's like a weekly, monthly, whatever, just trying to get together. And in that dinner, all right, they start talking about wanting to move. And you're a real estate agent. All right. So then you guys start talking about, oh my gosh, do you have an agent? No, I don't. Interesting. And start talking about that. All of a sudden, this neighbor became a prospective client, became a potential client. All right. And as soon as they became a potential client, this dinner became a business event. It became a business meal. Okay. So it's important to remember you don't have to go into it with the business intent, but when you're all is said and done, there had to have had business needed to be discussed, talked about, done over this meal. Okay. And where we tend to miss out, right, again, is because we don't think about how to make different meals out, different, times that we're going out for drinks or food into a business event, a business, and giving it a business purpose. All right. So if you're going out for drinks, all right, let's say you want to take some friends out for drinks and back to real estate agent, okay, you're a real estate agent and that they're renting and they've been talking about moving, all right? So why don't you just say, hey, we're going out for drinks on Friday. Can we chat a little bit about, your intentions to buy a house, and they're like, yeah, sure, let's do it. All right. You just made that into a business meeting. All right. Therefore, that meal out, that drinks, whatever you're having it has a business purpose. All right. Are you guys with me? All right. The flip side to that, where you might get in trouble. All right. And I see this I don't see this, but I know this happens, is you spend a night out, right? Whether it's at a meal or, at dinner, or you go out for drinks, you're like, well, I'm sure there's someone here that's a potential client, but you never actually talk business. You're just like, oh, I'm just trying to network and trying to, get a feel for if people need me, but you don't actually try to find a client or talk about business. And that's a stretch. That's not going to fall under, that reasonable business expense. All right. So I hope that kind of clarifies that. It has to have a business of purpose. But so start thinking about how you can make meals out into business purposes. All right. So easy. People think, okay, if you're meeting with a customer, right, or a client, check. Business meal. If you're meeting with a vendor, check. Those are easy ones. Ones people tend to forget about. If you're meeting with a potential client, okay, even if they don't end up signing on, let's say you're a real estate agent and you are meeting with John Smith, who said he was thinking about buying a house. You go and you take him out to dinner and you guys talk about it, and he decides to use a different agent or he decides not to move, right? That meal is still a business expense. You went in with the intent of doing business, right? You were trying to land a client. Okay, just because it didn't result in a client doesn't negate it from being a business expense. All right. And that's where people tend to leave money on the table, right? Potential clients, potential vendors, a big one, referral partners. Okay. I'm an accountant. If I want to start a network, a referral network with some financial advisors, maybe some attorneys, all right, and I want to go, meet with these people and build this network, I can do that over a meal and I can make it a business expense. Okay. Circling back around to that reasonableness thing. All right. One thing as you're just figuring out, and again, this falls under the ordinary and necessary, but if you think reasonable, you're going to be able to fall under that that ordinary and necessary. And it comes down to thinking about, okay, what is the revenue? What is the profit? What is the financial purpose of this meeting? Okay. And so let's say I met someone on LinkedIn. They lived out there. They actually work across, the Denver Tech Center. That's where I work. That's where our office is. And they are a financial advisor and they're looking for accountants to partner with. I know nothing about this person, right? It's just like, I want to go meet and greet, see if we're a good fit. All right. And so we go to coffee. All right, we go to coffee. I buy them a coffee and a breakfast sandwich I bought myself. Business expense. Okay. It's reasonable. Coffee with a potential new partner. We spend $25. Reasonable. Ordinary, necessary. I'm trying to build a relationship. It has a business purpose. Okay. And then let's go a little more extravagant. Okay. It doesn't always have to be small, coffees, small meals. Okay. Let's go back to, I am a real estate agent and I just closed on a house with a client, and, you know, it was a big house, right? Like, I mean, even in today's market, even a normal or small house, real estate agents are making 5 figures. All right. Just that's the market we're in. So I'm a real estate agent. I just closed. I made, $13,000 on this deal. All right. And I want to take my clients out to celebrate. Business relationship. Thank you. Right. Thank you for trusting me with selling this house. I appreciate it. Side to that is, when you're thankful, when you do a good job, they could turn into a referral, another business purpose. Okay. So no question that has business intent. All right. But they just bought a house. Okay, they are moving into a brand new house. I just made $13,000 as their real estate agent. I don't feel like coffee feels big enough, right? So we're going to go to Shanahan's and we're going to have steaks and we are going to pop some bottles of wine and champagne, and bill comes and we spent $500, right? Some people are going to go, that's too extravagant. I'm not allowed to, that's not ordinary and necessary, right? Or that's not reasonable. Okay. It is reasonable. Okay. A $500 meal out to thank a client who just made you $13,000. Absolutely reasonable. To thank a client and hope that they then become a referral partner or a referral for a friend or a family who then makes you another 10 grand. Okay. That $500 meal out, quite reasonable. Okay. So, but going back to the potential referral partner, right? Taking the stranger out who I don't know, who might send me some business, taking them out for a $500 dinner, that is not reasonable. That does not make sense. So when you're thinking about ordinary and necessary, I want you to instead think about business purpose, check. How do we make this? Is there a business purpose to this meal? And then keeping it reasonable. And the way to think about reasonable is, what is the financial flip side of this? Whether it's how much money did I make off this person or this person I'm trying to take out, or what is the potential to make, right? Another example of a referral partner, maybe I have a referral partner who sends me a new client every month. And let's say my average rate is $1,000. Okay. So this referral partner is essentially sending me $1,000 each month. All right. Coffee doesn't seem like a big enough thank you, right? I'm going to take them out for lunch, maybe a nice lunch. All right. So reasonable, I want you to think about, what's the financial flip side to this? What am I getting out of it? All right. And then figure out, okay, what's reasonable for that? Is it coffee? Is it lunch? Is it a nice dinner out? Is it a super nice dinner out? Okay. What's reasonable? Okay. So that's one qualification. We want to make sure that we have a business, that our meals out, the dining we're doing, has a business purpose. Okay. And that it's ordinary and necessary, but we're going to call it reasonable, that our expense is reasonable. Okay. The next piece to this is documentation. So qualification, we got it, check. Next is documentation. So the qualification, you guys, is what gives us peace of mind that should we ever get audited, it was legit. We're not being shady. Okay. And it also is making sure that we're taking every dollar that we should. All right. So it's dual purpose. The documentation piece is okay, if I ever do get audited, this is what's going to prove that I qualify, that I did it right, that I get to keep this deduction. Okay. So documentation is important. And documentation here can be easy. Okay. It can be super easy. And it cannot be. Okay. I always recommend you guys, when you have a business, to have some sort of bookkeeping system in place. QuickBooks Online, Xero, I know there's Wave, FreshBooks, your choice. But having something more than an Excel spreadsheet is going to make your life easier, and it's going to make things like documenting your expenses and your proof a lot quicker. Okay, so the documentation you need in order to make your meals, a legit business deduction. If you would ever get audited, the auditor wants to know where you spent the money, when you spent the money, how much money you spent, and why. Okay. And if you have some sort of system in place, okay, pulling this information is going to be so simple for you. All right. Most of it. There's one step you're going to have to manually do, but we'll get to that. Okay. So, first things first, make sure try not to spend cash on anything. Okay. Documentation. Cash gets messy, cash gets lost, like receipts get lost, records get lost. Okay. Try to put everything on a credit card or a debit card, everything that runs through the bank. Okay. And the reason for that is this. Okay. I'm going to tell you to keep all your receipts. Okay. It's what the IRS says to do. It's what I'm going to tell you to do. I'm also going to tell you that I've seen audits succeed based on just bank statements. Okay. Bank statements have been enough proof for certain auditors. Okay. I tell you that because I want you to save your receipts, but I don't want you to panic if you don't have them. But good practice, save your receipts. Okay. And so if you're using an Excel spreadsheet and you're keeping your bookkeeping super simple, what it looks like is you're taking a picture of your receipt and you're putting it in a tax folder. You never have to look at it again unless you get audited. Okay. If you have some sort of bookkeeping platform in place, you are likely going to be able to take a picture of your receipts from your phone and attach them into your QuickBooks or your Xero. I don't know if Wave and FreshBooks and the other ones do it. I know that QuickBooks and Xero does. Okay, so it makes keeping that documentation super easy. Okay, and when you run everything through a bank statement and you use a bookkeeping platform, okay, without any effort, you have your date the money was spent, you have where your money was spent, and you have how much money was spent, right? Because your bank transactions tell you the date that you used your debit card or your credit card, where you used it, and how much. Okay, so that piece is done. And if you're using some sort of bookkeeping platform, all right, then you're able to just go click on your meals expense, look at all the money you spent, and give it detail. The detail you're going to add is this. All right, in the memo, you're going to say who you took out for lunch or for a meal and why. That's it. The who and the why are going to go in the memo. And as soon as you add that who and the why, you have all of your documentation proof in order to hold an audit. Okay. And your who and what can be super simple. All right. It can be John Smith, potential client. John Smith, closing dinner. John Smith, potential vendor. John Smith, potential, I don't know, whatever, so just super easy. Okay. That's your documentation. All right. You want documentation of when you spent the money, where you spent the money, how much money you spent, who you spent it on, and why. What was the business purpose? Okay. So documentation is super easy. Last piece is reporting or recording. I don't remember what I call it, but this one is important. And so when you report it, okay, guys, it's going to go on your business tax return under meals. Okay. We're going to talk a little bit at the end. I know I'm running late on time. I'm sorry, but technically I got 5 minutes left. We'll get through it. Because meals are treated differently, okay, than other expenses, other business expenses. So you absolutely want to make sure that you have a separate line item for your meals. Okay, so that's first and foremost. So if you're using an Excel spreadsheet, you want to have a meals line where, if you're feeding all your bank feeds into an Excel spreadsheet. If you're using a software like QuickBooks Online or Xero, you want to make sure you have a meals line item on your P&L. All right. And you want to make sure that any food, dining, drinks, anything goes in here. Okay, you guys, because where we see audits lost, where we see money due, money owed to the IRS, is when businesses have put their meals under advertising or marketing. All right, because it makes sense, right? You're trying to get clients, you're trying to build, you are marketing, right? But the IRS does not give you a full deduction for meals. All right. They limit it to most part. I will talk about the few exceptions that they allow 100%. But for the most part, meals are only 50% deductible. So here's where we get in trouble. We have $10,000, all right, in meals expense this year, and we report it properly, right? We put $10,000 on meals. When we do our tax return, we're going to get a $5,000 deduction, right? Because 50% of 10,000 is 5,000. So we're going to get a $5,000 deduction. And if we're in the 25% tax bracket, right, that's going to save us $1,250 in taxes. All right. So that's how much we should pay is save is $1,250. But if we, sorry, I have a hair. But if we accidentally or mistakenly put that $10,000 of meals under advertising, all right, we just took a 100% deduction, right? So we took a $10,000 deduction, and at 25%, we saved $2,500 in taxes. So in that instance, if we go under IRS exam, they're going to say you actually owe us $1,250 because you took too much. You took a 100% deduction when you were only entitled to 50 on these expenses. Okay. So making sure your meals are broken out on their own line item is the most important thing you can do when it comes to reporting. Okay. And that said, there are some instances where food and meals can be 100% deductible. And then in that case, you guys, what we do for our clients is we say meals 50%, meals 100%. All right. And there are a few instances where meals are 100%. And this is where I'm going to need my cheat sheet because I don't want to forget any. I'm pretty sure I know them all, but I don't want to only give you 3 of them and have someone come back and be like, aren't these also 100% deductible? So there we go. So let's see. Okay. I don't know where it is. So things that are 100% deductible. First and foremost is meals for events for your employees. All right. So this is not a, hey, I need you working late. I'm going to get you pizza. That's 50%. But if it's a employee appreciation, maybe a holiday party, anything like that, where you're hosting your employees, right? And you're thanking them or, showing appreciation, any food served at those kind of events is going to be 100% deductible. So you want to put that on that separate 100% meals line. All right. And keep in mind that most of the people in attendance have to be employees. Spouses, kids can be there, but majority, it has to have the purpose of being an appreciation or an event for your employees. All right. Another is if you are doing some sort of client event, right? This is very common with my real estate agents, right? Open houses. All right. If you're doing an open house and you have bottled water, maybe you got some breakfast sandwiches or some muffins, anything like that, that type of food and drink is going to be 100% deductible. So you want to put it in the meals 100% line item. All right. Another is if you're doing any sort of event for clients, vendors, and like a training, right? If you're going to do a lunch and learn, or you're going to I'm an accountant, maybe I'm going to do a seminar, right, on tax planning, and I'm going to do it over dinner at Maggiano's. I don't know. We're going to get that expense when I am buying food or meals for a group of people I'm providing something for. All right. Also going to be 100%. Okay. Things to keep in mind that get missed. All right. When we are traveling, our meals are deductible. 50%, we're back to like the regular, 50% meals. But when we're traveling for business, 50% of our meals are going to be deductible. So if I'm going to a conference, okay, in Arizona for 3 days, then all of my meals while I'm at that conference for those 3 days for that business expense are going to be deductible. I want to make sure I capture those. All right. One thing that gets missed, and this is one that you do need to be careful, like you just need you need to be smart, reasonable. Come back to that word reasonable, is if you have a home office, all right, technically anytime you leave your home office, you're out working. All right. And if while you're out working, all right, and you need to pick up a meal, it could be a business expense, even if it's just you. And I want to give you an example of one that has passed audit and one that has not passed audit. Okay. So love real estate agents. Okay. Real estate agent goes, they have a closing in the morning across town. Okay. So they go, it's 15 miles, right? So on the other side of town, we have a closing at 9 a.m. We go, we do our closing. We're done at 10. We have showings at noon. Okay. With another client. So I have this 2-hour gap. All right. And so I decided to hit a Starbucks and work for 2 hours at this Starbucks between my two business events. Okay. Between my closing and my showings. And I grab a coffee and I grab a breakfast sandwich. Okay. I'm going to count that as a business deduction. And the IRS is going to say I'm okay to do that because I was out conducting business, right? I was out with clients, and I needed to eat, right? Essentially is what it comes down to. There's no black and white when it comes to this, all right? And I'm going to give you an example of one that did not uphold audit, okay? Home office, okay? I think this was not a real estate agent, but everyone's a real estate agent today, okay? Real estate agent has a home office, but decides they want to go up to Starbucks and work for the day, all right? No purpose for leaving the house, right? If they're not meeting a client, they're not having to go do any sort of, closings or anything. I just needed a change of scenery. All right. I go up to Starbucks, I get food, I get a coffee. That should not be a business deduction. All right. And the difference being, right, do you see the difference? So this difference in the first, I was out, I was working, I just needed to grab a quick bite in between. And that I had more work to do. All right. And that made more sense than like coming home and, to my home office and then leaving again. Right. That wouldn't have been logical. In this instance, I just didn't want to work at home. So I wouldn't work to Starbucks. Okay. That meal, not. Okay. So something to keep in mind that you do not have to be like when I say meals during travel, during work travel, yes, that absolutely includes when you're off at a conference, when you're out of state, but it also is if you're out and about working for the day, right? If I'm legitimately out doing closings or doing showings or, maybe I have to go spend a whole day at a client's, right? As an accountant, okay? Maybe I'm going to do a VIP day with my client across town and I'm going to be there for 8 hours, all right? I take an hour long lunch break and I go get lunch. I'm counting that as a business expense because I'm out in the field working, okay? So those are areas where we tend to miss deductions, and I want to make sure you guys are picking them up. All right. So that's it. So to summarize, meals, you want to make sure you're qualifying that it is a reasonable expense with business purpose. Okay. You're documenting. Okay. Number 2, document. And that means you're putting when you spent the money, where you spent the money, how much you spent, who you were with, and what the business purpose was. Okay, which sounds like a lot, but again, if you're using your bank feeds, that's going to give you most of it. You just need to add the who and the what, all right, and save your receipts. And the last one is reporting and making sure that your meals are separate because they are treated differently. They're only a 50% deduction with the few 100% deductions. So what I want to see when you're doing your tax return or when you're preparing your P&L, meals 50%, that's where most of your meals are going to be. All right. And then if you do have some of those instances where you are taking advantage of those 100%, which you should be, right? They're there for a reason, use them. All right. If you're spending meals that qualify for that 100%, that's a second separate line item. Okay. All right, guys. Thanks for joining me. We will see you. So some good things. So next week, let me see what we're talking about. Next week is travel. We're going to talk about travel next week. So I'll see you same time, same place next Thursday. And then exciting things starting the following Monday, the first Monday in October, you guys, we are going to start doing a Money Monday co-working session on Mondays. All right. So for me, Mondays are my money day. It's where I look at my business money. I do my money activities. So every Monday, I'm going to show up, not here on StreamYard, but we're going to show up in a Teams meeting. If you guys want to come, if you've ever done a co-working session, what it is, it's accountability. Okay. It's saying, I need to do this activity in my business. I tend to not do it. So I'm going to go meet with other people doing the same things. In an hour, we can get something done. So starting on October 7th, we're going to start those Money Monday co-working sessions. So be on the lookout for that information as well. All right, you guys. Otherwise, I will see you next Thursday. Have a good week. Have a good Thursday. Have a good weekend. And we'll see you next week.